Are you tired of constantly chasing trades after they've already broken out, only to get stopped out when the price reverses? This frustrating cycle of being late to trades and taking losses is all too common among traders. But what if I told you there's a professional trading pattern that can help you anticipate breakouts before they happen? Today, we're diving deep into the Volatility Contraction Pattern, or VCP, a powerful tool used by some of the most successful traders in the market. Whether you're a beginner looking to improve your trading strategy or an experienced trader struggling with timing your entries, this step-by-step breakdown will show you exactly how to identify and trade this high-probability setup. By the end of this video, you'll understand how to spot these patterns forming, know the precise timing for entries, and most importantly, learn how to avoid the common mistakes that trap most traders. The Volatility Contraction Pattern, first popularized by legendary trader Mark Minervini, is a powerful price structure that forms when a stock's trading range becomes progressively tighter, while volume simultaneously decreases. Think of it as a coiling spring. The more compressed it becomes, the more powerful the eventual release. What makes VCP particularly effective is its ability to identify stocks preparing for significant moves before they happen. Unlike reactive trading where you chase price action, VCP allows you to position yourself ahead of major breakouts. The pattern typically shows 3 or more contractions, with each pullback becoming shallower than the last, often starting around 15%, then reducing to 8%, and finally to just 4% or less. This decreasing volatility, combined with declining volume, indicates that sellers are becoming exhausted while buyers are quietly accumulating shares. It's this precise combination of price contraction and volume decline that creates the perfect conditions for explosive breakouts. Let's address the most common mistakes traders make with VCP patterns and then examine a real-world example that illustrates proper execution. First, many traders jump in too early, unable to resist the temptation of trying to get the absolute bottom of the pattern. This usually results in being shaken out before the real move begins. Another critical error is ignoring volume characteristics. Remember, declining volume during the contraction phase is essential for confirming the pattern's validity. Traders also frequently force patterns that don't meet the strict criteria, trying to make trades fit their desired setup rather than waiting for genuine VCPs to form. Perhaps the most costly mistake is improper stop placement, either too tight, getting you shaken out of valid setups, or too loose, resulting in unnecessary losses. Looking at our real-world example, notice how each contraction becomes progressively tighter, with volume dropping significantly. The ideal entry point comes at the break of the final contraction, with your stop-loss placed just below the last minor low. This structure provides a clear risk-to-reward ratio and a definitive invalidation point. Now, let's equip you with practical tools to find these setups in your own trading. When scanning for VCP patterns, look for stocks showing strong relative strength compared to the market, with a history of earnings growth and institutional sponsorship. Your scanning criteria should include price action forming at least 3 distinct contractions, each smaller than the last, volume declining by 30% or more during the pattern formation, and the stock trading above key moving averages. Understanding the supply and demand dynamics is crucial. During the contraction phase, supply is being absorbed by institutional accumulation, setting up the conditions for a powerful move when demand finally overwhelms the remaining supply. Before we wrap up, remember to like and subscribe for more advanced trading patterns like this one. In our next video, we'll tackle the crucial topic of how to handle false breakouts in VCP patterns, so make sure you're subscribed to catch that essential follow-up. Your trading success depends on mastering these professional setups, and VCP is one of the most reliable patterns in any trader's arsenal.